Why are these not working? I just wondered.
Tech support.
Dave might be working on technical
Where's Mike?
difficulties because I've had some.
Technical difficulties?
Yeah, with the computers and stuff.
I just wondered why they weren't working.
But yours is still working, huh?
Yep.
His is working.
Don't worry about it. Don't worry about it. No, we're fine. But I don't know what they did. For some reason, the one, well, Chuck's working. We can all gather down there. Something happened here. I don't know if they unplugged something. I don't know what's going on.
Everybody all set?
Yes, sir.
You guys
I
all
got
set?
my Ford card, but I'm not right.
All set? Okay. Call the meeting to order for the Village of Rolling Beach. This is our public hearing for Monday, December 8th, 2014. Please call the roll.
Trustee Husk.
Here.
Trustee Valdez. Trustee Smith. Trustee Butler.
Here.
Trustee Mount.
Here.
Trustee Mattingly.
Here.
Mayor Hill.
Here. Let the record show a quorum is present. Is there a motion to approve the agenda?
So moved.
Second?
Motion by Trustee Butler, second by Trustee Mount. All in favor?
Aye.
Opposed? Motion is approved, or agenda is approved as written. We have one item of business on this public hearing. It's the 2014 tax levy. I'll turn it over to our Finance Director, Kevin Boyso. Kevin?
Thank you, Mayor and members of the board. The purpose of today's meeting is to go over the property tax levy, the public hearing. And before we head into the details of the levy, we're going to kind of take a look at the what the economy is looking like on a nationwide level. And this is basically information based on a national survey of finance directors, and it includes about 350 communities. And this is just kind of a graph of showing the responses that they have provided. And this graph here takes a look at the three major revenues for municipalities, and that includes the sales tax, property tax, and income taxes. And as you can see on in 2014, it's showing the all three major revenues are projected to increase. However, they are projected to increase at a lower rate than the prior year. And you can see that one of the biggest changes is the property tax in there. And overall, there is 1 percentage point change from prior year to this year for these type of revenues. And then we look at the some of the items that go into creating a budget. And as expected, some of the items that have a negative effect on the budget are big ticket items or expense items. And that includes public safety, prices for services and costs, also the building the roads and buildings. That kind of stuff has a negative effect on the budget, meaning the cost is growing at a faster rate than what we're expecting. When you look at the revenue side, so there will be the positive things, and that includes even though the tax base is decreasing, it's not decreasing at a rate that it was or it used to. So this year we're going to look later about a decrease on our EAV by 4% instead of an 8% that we experienced in 2013. And then we look at the what the plans are for employment in these communities. And this is the first time that there is a big gap between the plan for hiring people and the plan for decreasing the workforce. So that's a positive thing for this area. And that 1/3 of municipalities that have responded to these survey plan on increasing their workforce, and that's based on the economic conditions that they're seeing. Based on these, what the village has done is it continues to operate, or the operating philosophy includes a mix of different items, and that includes introducing new technology to make our operations more efficient, create different partnerships with the private sector. If there are some things that they can do better, then we just make sure that we partner with them to get those things done in a more efficient way. And as a result of these items, then what we end up with is we have a reduced workforce, and we're now at 76.5 full-time equivalent employees without reducing the services and without also reducing the capital expenditures. In addition, as you approved this year, there was a financial forecast and also a capital plan, and that was introduced again without reducing any of the expenditures, keeping the service level at the same level as if we had 99 people before. That leads us into the proposed 2014 property tax levy, and what this graph shows here is there are several items here, and one of them is the 2013 EAV, or the value of all the property that the village can tax. And that for 2013 came out to $314 million, or $350 million, rounding up. And the projection for 2014 is that it will decrease by 4%. So what you see in there is 302 million or 302 million in EAB for 2014. So based on that, the proposed tax levy comes up to a rate of 0.823. And later on, we're going to see the details of how that money is going to be allocated. So what the effect is of this tax rate is going to be, it's in 2014, as discussed during our finance committee, if we're looking at a home that is valued at $150,000 in 2013, and it decreased, the value of that house decreased by 4%, then it went down to $144,000. So the tax bill for 2014 is expected to be $395. And the overall tax levy is an increase of 1.7%, and that it basically represents the inflation rate from 2013 tax extension, which is the actual receipts that the village got during that year. How is the village going to use the property tax? Some of it is going into the corporate fund, which is the general operations. Then it goes into the liability insurance, so that includes workers' comp, property insurance, and of course our obligations with the IMRF and the police pension. And this is just a breakdown of what this levy, or how the funds are going to be allocated. Again, 40% goes into the corporate fund, and 39% goes into the police pension. 6% is going into the IMRF, and 15% liability insurance. Out of the corporate 40%, that one is 65% is being allocated to the police force or police department. And the rest, or about 20%, is going into the public works, and then the rest is being allocated among all the other departments in the general fund. So as I mentioned before, we are estimating that the EAV is going to decrease by 4%. Again, this is just an estimate based on the information that was provided by the county, so they make different changes between now and when the actual tax bill goes out. So that is definitely expected to change. but the projected EAB for 2014 again is 302 million compared to 350 million in 2013. Projected tax rate of 0.823 as compared to 2013, the actual rate was 0.777. Then this takes us into just a bit of history since the economy kind of took a downturn. And since 2008, here you can see the different changes that the village has made to the tax levy. So it's increased from 3 years was flat at 0%, no increases, and then 2013, 1.7, and this year the proposed is 1.7% change. This slide takes us into the actual rate that residents paid during 2013 tax bill. So the total tax rate was 14.151%, and out of that, 5.5% was receipts that came into the village to the village funds, and as you can tell, most of that money goes into the school district, which is about 66% or 67% of that. And what you can see here is also the whole picture of how anyone's tax or property tax bill is allocated based on the different taxing districts within the community. Again, this one shows just kind of the portion of that overall tax bill for an average resident and what it's coming to, or what's the receipts that come into the village funds. And so you can see in 2008 was 6.34, now we're down to 5.49. So overall that out of the last 6 years, the portion of that amount of the property taxes continues to decrease as compared to the other taxing bodies. And again, this is just an example, two kind of common examples that are used when we're looking at a proposed property tax levy. And one of them is, again, as I mentioned, if a home that was valued at $150,000 in 2013 drops by 4%, then the resident is expected to pay $395 for the village portion of that tax bill, which is about $33 a month. And in the other case, if that property is valued at $150,000 and assuming there was no change in the value, then that property tax bill would be $412 or $34 per month. That pretty much concludes the tax levy hearing. If there are any questions, I'll be happy to answer those.
Anyone on the board have any questions for Kevin? As you said, we had kept the tax levy unchanged for 3 years. And a lot of the other taxing districts, unfortunately, weren't able to do that. So our percent kept on dropping, and theirs kept on going up. We did have to raise it finally last year, 1.7%, and again this year, 1.7%, which is very minimal, just enough to help cover our costs for our contracts with our staff and so forth. Does anyone in our audience have any questions on the tax levy? Well, thank you all for being here for the tax levy. If there's no questions, is there a motion to adjourn? Motion by trustee Mattingly.
Second?
Second by trustee Butler. All in favor?
Aye.
Opposed? We're adjourned. We'll start our board meeting in just a few minutes.